Do you really think you'll learn and grow and achieve without failing? Maxime Lagacé, you won't. That's why you want to practice trade as long as it takes, 10 to 15 minutes each and every day. Consistency is the key to greatness. Perseverance. Stay with it. You can do it. What have we learned from what we saw happening on the charts yesterday and today? Well, we saw things down yesterday and the day before. That was on both Tuesday and Wednesday. And then things popped up for the day, 0.87%. We talked about the fact that our weekly chart, we still had a green candle and we weren't calling it for a down move just based upon what the smaller charts were doing. Why? Because all things being equal, the market tends to move in the direction of the largest chart. I've said that 1,000 times if I've said it once. That's why we use the big candles on the big chart. And by big, I mean the largest time frame. They tend to predict better than anything else which way things are going to go. And you look at this S&P 500 chart and you have to go back a year to find an anomaly where it faked us out. It started to go up and then died. But plenty of time over that week, the following week after it tried to go up where it died, to allow us to get out, jump in, and write it down for a profitable trade on our practice trading. So again, remember, pay attention to the big chart. It tells you where things are. When it dies, it typically means that the trend itself has died. As Mr. Livermore said, the trend is your friend, and someone else added, until the end. You got to know when it's ending. Well, it hasn't quite ended yet. We will continue to watch, wait, and see where it is going. We can see that things have fallen off below the weekly trend line on the 2-day. But again, it was an up day. We can see that on the half-day chart where it started heading up. Now, it still could die and roll back over, but we want to wait and see this candle, that is the weekly candle, go red. When it does, that is when we can feel good about a trigger. Now, NASDAQ 100, we've talked about this for many weeks, how it has been stronger in its up move than the S&P 500. Showed itself again today, 2.43%. If you had jumped in when this baby had turned to green, and again, you could have jumped in super early, very dangerous here. You could have just easily waited till right here. Worst jumping in point was the high during the week of 315.25. How much has it gained over all these weeks? Well, the high over the course of this week, 341.01. So 315 to 341. Do you think you could have captured a decent profit in the middle there? I think you could have, if you just would have followed the rules. That's what the rules are there for, because they work. We look on the 2-day chart, things are moving up. We look on the half-day chart, things are moving up after 2 down days, well above the weekly trend line on the half-day and the 2-day. So again, practice trade these things to learn how they work. We're not a stock calling service. We're an education firm. Let's move on to 20-year bonds, down again. Nice, 0.23%. We can see that weekly chart where we bounced off a few times off what has become a ceiling. And of course, this move continuing to light it up, pulling away from the weekly trend line on the down move. TBF is the inverse fund for 20-year bonds. It's one of the inverse funds. TBF, it's the single inverse. You know, I put out earlier in the week how to make, let's see, what is it called? Inverse funds, how to make money when markets crash. That is a good training for you. I hope that you paid attention to that during the week. And of course, you can see where things are moving up quite nicely. And I'm trying to figure out why this trend line is here and this trend line is not translating on the other charts. I'm going to have to sort that out. But if we had our trend line here, you would see that we are nice and, I know what I've done here. This is the inverse fund, but you can see where things are, again, continuing to move up. Let's get back to the underlying chart, which is what I like to keep up with. I don't track or trade off other charts. If I'm using inverse funds, again, I'm taking my cues off what's happening on the underlying fundamental chart. And you can see well below the weekly trend line on the 2-day and the half-day, and in fact going lower, which is good to see. Let's move from there in the confusion to gold, which is down almost 1%, which is beautiful. Gold paired everything off last week and continues to move in the down direction. As I told you yesterday, whenever gold reaches whatever its most recent high is and is starting to fall off, that's when all the gold commercials come out. The minute you hear everybody trying to sell you gold, you know gold has peaked, and it's the sucker's play at that point. It always seems to be that way. Cue your ears up and listen for that. I notice it every single time. So again, we see gold has crossed over the weekly trend line on the 2-day, well below it on that half-day. We saw where it dumped below, up a little, slid sideways, and then over the last 2 days rolling back over again. Good to see. What about Bitcoin? Up a little bit for the day, 0.93%, but again, still decently below on the 2-day chart, the weekly trend line. Same on the half-day chart. So again, we want to see Bitcoin continue to pull back and move down. We want to see all these triggers reset so that we can actually chart Bitcoin, so that the Bitcoin chart, we want to see it become more like the S&P, where we can see down moves and up moves, where it moves in a predictable pattern that you can practice trade, because if it doesn't, you're just throwing monkey, or you're like a monkey throwing darts at a dartboard. There's no telling what you might hit. You might hit a move that goes up and do okay, but you also might jump in at the complete wrong time and get hammered. And will Bitcoin hammer you? It will hammer you. That is where we are as we end the day on Thursday, go into Friday. Don't forget, at the end of the day on Friday, we, of course, produce for you the weekly review and forecast, where we talk about what happened over the week and what the charts are telling us may be in store for us the following week. If you're a Patreon member, thank you so much. I did already email out to all the Patreon members the weekly vertical crossovers for the week. We had 14. Looks like we had 4 up and 10 down. We also sent to you the links to Charting Cryptos and Commodities. We'll release that to the general public tomorrow. We, of course, had already uploaded that earlier in the week, along with the 3-wave trades, which are liquid ETFs and stocks that I look for practice trades that are either initiating or that we saw initiate and are running, and give you some commentary on those to give our Patreon members more things to look at and practice trade. The nice thing is they're liquid, so they're the kind of things you can look at to practice trade. Encourage Patreon members. They usually try to put that out early. I'm set to send it out on Wednesdays, but I usually get it out even earlier, around Tuesday, just to get it out of the way. That is where we are, folks. If you're not a Patreon member, want to support the work we do here, remember, the things you support tend to stay around. We would sure appreciate your support at any of the 3 levels. The minute you join, not only do you get all the things I just talked about, you also get an email that includes our 3-part series, Options Made Simple, the Charting Wealth Way. Only way to get it. And you'll get a lot out of it if you're interested in learning how options work, so you can start practice trading them with stuff that you hear on the channel every day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.